Hi traders and welcome to the Technical Analysis Market Watch on Friday the 9th of December. So we've seen some good movements this week. A lot of the levels that we were talking about last week basically got hit, and we're seeing a little bit of consolidation ahead of some pretty important news tonight in the US. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD. And you can see that we hit the target that we were looking for last week at around that 68.50 mark, and it did sell down to the 20 moving average. As quite often it's been a bit of a support line for it basically for the last 2 months, and you can see that it was no different here. And also, probably just as importantly, it actually landed on a roll reversal zone. So we can see we've got this level here at around the 67.20. And although it did break just slightly below, it has pulled up very, very quickly above it. And I think it's a really important notion. When it does actually do that and find support on the 20 moving average, you're getting a double-ended level of support, which is really, really important. So currently sitting at just below the 68 cent mark. Realistically, though, we've got to be very mindful that the previous peak, even though it did hit a resistance point, was only just above the two previous peaks. So it got there, but not with a hell of a lot of momentum, and it did sell off quite aggressively. So yeah, that being said, we know we're at support. If we are going to go long, it's going to be from here. But the very first target we'll be aiming for is the 68.50, back to where it was only a few days ago, like early last week. And until it does actually break that, we're not really going to be looking for opportunities up to the 70 cent mark. We know we've got the 200 moving average not very far away. And of course, we need to break that resistance before we even get to the 200. So in the first instance, I'd be looking for a scalping opportunity. But if the market turns around and we see a little bit of weakness, we can see the MACD is already starting to lose a little bit of strength on the daily here. If we do see a little bit of weakness and we get a daily close below this resistance zone, and the 20 moving average, it will be resistance if it breaks down from there. We could definitely start looking at levels at around that 65 cent mark, which is the next real target for it. So the two ways we play it, basically scalping up to the 68.50 if we continue on from here, which is a pretty solid sign. But if it does reverse in the US trading session, especially after the news, and we get a close below the support line that will become resistance and the 20 moving average, next week might look at a fairly weak sort of start to the week, and we start to target the low 66 cent mark or even high 50 or 69s. So 59s, 65.90s, sorry. So yeah, very, very important zone, and it has really bounced off this level pretty well. We'll move over to the US dollar CAD, and yeah, this one's given us a little bit of strength. We can see we were pushing up last week. We landed on the 20 moving average, and it went straight through the 50. We hit the target that you would expect it to hit, which is around that 60, the 136, 60 to 70 mark right through here. It's found a little bit of resistance at that point, but there's probably not enough market movement to really say that this is going to be the level that will stop. So the fact that it's actually come back down, touching a level that you could certainly say could be support for it. The 50 moving average is now behind it, so is the 20. If we do get a break above the 136.80 level, so, and by a break I mean a daily, it needs to be a reasonable time frame to obviously get that. We're going to be looking back at the 138 as the target. So pretty good trading on the CAD. I think it's been very technical, and you can see we know we've got a series of higher highs and higher lows, obviously. So the lightning bolts have been working ever since we hit that roll reversal zone way back at 132. So it's been doing all the right things, and the MACD is positive again. You can see that the 12 and the 26 have crossed to the right direction for that potential long. So in other ways of looking at this trade, if you are going to short it, it's got a bit of work to do, really. I mean, for mine, I don't think it looks short until it actually makes a series of lower highs and lower lows, and it needs to get below the 135 for that to actually happen. So, and that's a close below the 135, not just trading. Okay, so realistically, we need probably a movement up, which would give us more confidence that I think the momentum will continue. It's always better to trade with that momentum, but if it does reverse from here, the short will be back down to around this level here at around the 134, which is the first place that you're going to find some sort of support. As you can see, it was right through at these levels here. All right, move over to the US dollar yen now. And yeah, this one's, look, it's had a bit of a resurgence this week, but not much. It doesn't look like very much on a chart, but it is probably about 150 points. It landed on the 200 moving average, and we've got that support line there that it did break through. When you've got a very important support line, you can't expect it just to touch it and actually bounce straight off it. It is quite common, especially if there's a key moving average very close to that level, that you will see a little bit of a breach like this one did here, only by a handful of pips, but land on the 200 moving average and then rebound off. That still is a significant touch, okay? So even though it has broken through and it has come back and traded above it very quickly. So That being said, the 20 moving average above us now is where the resistance is going to be, which is also coinciding with that 138 level. Obviously the dollar strength is going to play a bit of a role in where this one goes. But to me, if I was scalping this one, I would be looking for an opportunity back down to the 135 on the short side, and I would be looking at taking profits at around the 138.50 on the high side. But just be mindful that if it takes a few days, the 20 moving average is going to drop another level again. So just be very careful with that, knowing that there is very strong resistance in front of it. My preference on this one is really, it's actually an unbiased view. I think it's right in the middle of this channel. Yeah, we're trading roughly around that 136.70 mark at the moment. I think it could go to 135.50 or 138.50 just as easily. So realistically, look for the smaller time frame changes of trend. If you see a bit of a move on a 15-minute or a 1 hour where a lightning bolt actually happens in the direction that you're going for, I think that's the direction you can take with the short-term momentum. But just be very mindful that the resistance is not far away and the support is not far away either for those two particular trades. So good trading though. I think it's pretty good for scalping, but we have to wait a little bit longer for a significant shift in a particular direction. And my feeling at the moment is that it's at very strong support. So if it is going to reverse and start moving back up again, this is the level that it's going to do it. All right, let's go over to the dollar index now. And yeah, this one is an interesting one. It's in a very, very important zone. It has been here for a few weeks now. And realistically, we were talking about this last week and it was basically at the same spot. It sold off a little bit. It got down to the as low as 103.80 here. You can see it's a very low move down, which pushed the euro higher, of course. It's starting to find a little bit of a base here at this level, though. So it's going to go one of two ways, obviously, but I think that it's not going to hang around here for very long. We're either going to see a significant break and push past the 103.80, and then we're going to start tracking down to the 102.50, or it's going to get up above the 20 moving average again and start tracking up back to the 105. I mean, this is a daily chart, and as you can see, the movements are getting quite restrictive now. Even though it is still technically making lower highs and lower lows, this was a very shallow pullback. And what concerns me about the long here is that we've got a 200 moving average, a roll reversal zone at that 105, and a 20 moving average bearing down on it. So we've got three very significant points of resistance right in front of it right now. So it's got some work to do to go long, I make no mistake. But if it does do that, you've got to be mindful that a very, very strong resistance has been broken, and that bodes very well for a move back up to the 107. So this is why I'm really conscious of the fact that the short is more likely because there's less in front of it. And if it does go short, if it continues on its move down, I mean, it has tested the 20 moving average and the 200 here on a daily. If it does go short, 103.30 is probably going to be the very first target, because that's the first real level of support that we can find for it way back here in the June of 22. So not very far away. Very important zone. We'll go to the euro, of course, the main beneficiary of that move, trying to break higher, a series of higher highs and higher lows. No worries about that. It did try and make a new high here. You can see that 105.88, I think was the highest point it got to. So it hit the point that we were talking about last week, which is great. Hopefully you were able to trade that, because it was a reasonable move, and it was very likely that it was actually going to do that. There was no real resistance in front of it all the way to the nearly 106 really, but it always stops at the 80s. Like, we know that the 80s are very important zones in currency. So hopefully you're able to take that trade. A little bit of a pullback, a shallow pullback, very similar to the dollar index, of course, the complete reverse of what we saw. If we see a break above the 106, it's going to be significant. That's going to see a very big short on the dollar index, probably down to the 102s, like I said. But again, I wouldn't be trading that until it actually does it. This is not one of the ones where you want to be the first person in the battle. You want to see price actually get past that level first, close above it, and then trade the retrace back to it. Generally, they do retrace to that key level, and if they do retrace, that becomes a very strong roll reversal zone and gives you a far better trade actually to go long. Don't forget, there is a lot of movement up on this particular pair. So the Euro USD can go all the way to 109 with no trouble whatsoever. So you don't have to be the first trade in at 106. Wait for it to break through. On the flip side, of course, the dollar index starts to increase in strength, which is the least likely, but if it does do it, the euro is going to look short past the 20 moving average. So if we get a break below a daily close, below the 20 moving average on the daily, then we start looking at shorting opportunities back to the next key zone at around that 102.50 area. So you can trade it both ways, but at the moment, the most likely scenario is it's going to break the 106. So very important to keep an eye on it. Just be mindful if you are trading long, it's got resistance only about 15 pips away. So that is very strong resistance in front of it. My gut feeling would be to wait for that to break through and trade the retest if long is where you want to go. All right, the last one we'll have a look at is the US 500, of course, the all-important S&P. The channel got broken this week. You can see that we've got that ascending channel got broken all the way down to our support level. So hopefully you're able to trade last week's lines that we were talking about, because they played out perfectly. You should have been able to get a good short down all the way to the 39 marker here. You can see that we reached 39.20 was where our line was drawn. It did go slightly past that to around the 39.15. So you should have been out of that trade. But this is the level, if it's going to find support, this is the level it's going to find support. This must hold in order for the US to basically maintain strength and rebound from this level. If we see a break below this level, it's highly likely that we're going to get down to the 3800s again. And look, we have got significant option walls at the 3800, and we've got major expiries happening next week. So I'm probably mindful that even if it does short, there's a good chance it's going to hold up above 3,800, and that is 100, or it's effectively 150 points from here. So there is significant shorting opportunities without it selling off to a point where it's going to panic the market. So I think that be mindful that 3,800 is going to be very strong support if it does start to sell off from here. It did break the channel, and it is retesting the bottom of the channel and the 20 moving average from below. So generally, as a rule, that's not really a good sign for strength, okay? Like we saw a high that didn't reach the top of the channel, and we knew that was strong resistance at that 40-30 anyway, so and again at the 41. So we had two very strong points of resistance that were going to be difficult to break through, and so we give it a little bit of leeway for not reaching the top of the channel, but the fact that it's broken the bottom is concerning. And what it does from here, I would expect it's probably going to wait for the news. But if we do get a move down from the 20 moving average and the bottom of the channel, 3,800 is a likely target. But I think you can probably set your take profits there, at least for the next 5 trading days. Okay. If we get a break above these levels, of course, if we get back into the channel and above the 20 moving average, then we're going to start targeting the 41 and 41.50 again. So really let price dictate what we do here. I don't think we want to be preempting anything. Trade what we see, and we should be good. Okay, hopefully you're able to get some good opportunities this week. We saw a very technical market, and hopefully you're able to take advantage of those good levels. Have a great weekend, and I look forward to seeing you all next week.